The live intraday price for Lithium Americas Corp, trading under the ticker LAC, currently sits at $4.91 as of early morning trading on Thursday, April 23, 2026. We are seeing a positive movement of approximately 3.59% so far this session, with the stock bouncing off an opening of $4.85 and hitting a daily high of $5.01. This uptick is happening on relatively steady volume, suggesting that the bulls are trying to reclaim some ground after a period of intense volatility that has defined the lithium sector over the past few months. While the market sees a small mining company struggling with the gravity of a massive construction project, the reality is that Lithium Americas has quietly moved into the de-risking phase that usually precedes a major institutional re-rating. Most retail investors are staring at the daily fluctuations, but the smart money is looking at the fact that 2026 is officially the year of peak construction for the Thacker Pass project in Nevada. We aren't just talking about moving dirt anymore. We are talking about a site that currently has nearly 1,000 personnel on the ground, a number expected to double by the end of the year. The expectation in the market right now is one of weary caution. If you look at the 52-week range, this stock has swung from a high of $10.52 down to a low of $2.47. That kind of spread creates a lot of bag holders and nervous traders who are quick to sell on any sign of weakness. The common narrative is that lithium prices are too low to justify aggressive mining valuations and that the electric vehicle slowdown has killed the bull case. However, the reality is that the supply-demand deficit for the second half of 2026 is looking increasingly sharp. While the general public focuses on passenger EVs, the massive surge in data center energy storage driven by AI infrastructure is creating a secondary demand floor that few were pricing in a year ago. When you combine this with the geopolitical reality of the U.S. government practically underwriting the Thacker Pass build-out through a $2.23 billion Department of Energy loan, you start to see why firms like Wedbush recently initiated coverage with an $8 price target. That is a massive gap between the current sub-$5 price and what analysts believe the asset is actually worth. If you are using tools like the Schwab Intelligent Portfolios or exploring various investing sites for online investment opportunities, you've likely noticed that the basic material sector is a bit of a minefield lately. But within that minefield, LAC stands out because it isn't just another speculative junior miner. It is a strategic national asset. The partnership with General Motors, which includes a $625 million joint venture, essentially guarantees a buyer for the product before the first ton is even processed. This is the reality that is starting to override the expectation of failure. When we look at online investing trends, the movement is shifting away from pure growth and towards security of supply. For those seeking investment help or doing self-investing through an individual brokerage, the question isn't whether lithium is needed, but who can actually produce it on American soil. The recent trading activity shows a significant tug-of-war. We saw the stock dip recently due to broader geopolitical tensions in the Middle East, which often causes a flight to safety and a sell-off in high beta stocks. LAC has a beta of over 3.0, meaning it moves 3 times as much as the broader market. When the S&P 500 sneezes, LAC catches a cold. But look at the institutional activity. We are seeing massive stake increases from players like Toronto-Dominion and Virtu Financial. These aren't day traders. These are institutions building positions because they understand that the mechanical completion of Phase 1 is targeted for late 2027. We are currently in the boring middle of the construction cycle, which is historically when the best entry points occur for patient capital. If you're checking your Robinhood app or browsing through your Fidelity investments, you'll see that the volatility is high, but the floor seems to be firming up around these levels. Comment below how many shares of Lithium Americas Corp you currently hold, or if you prefer sticking to broader plays like Albemarle or even a lithium ETF. Let's break down exactly what this company is doing for those who might be new to the story. Lithium Americas is the entity responsible for developing Thacker Pass in Humboldt County, Nevada. This isn't just a mine, it's the largest known measured and indicated lithium resource in the world. The business model is straightforward but capital intensive. Extract lithium from sedimentary clay and process it into battery-quality lithium carbonate. They are aiming for an initial production capacity of 40,000 tons per year in Phase 1, with the potential to scale up to 160,000 tons. This is a massive operation that requires deep pockets, which is why the $2.23 billion DOE loan and the GM equity are so critical. Without those, the execution risk would be insurmountable. Past performance shows a company that successfully split itself into two, separating its Argentine assets into Lithium Argentina to focus purely on this domestic U.S. project. This move was designed to appeal to U.S. investors and government agencies looking to decouple from Chinese supply chains. The technicals right now are showing the stock trading below its 50-day and 200-day moving averages, which usually signals a bearish trend. However, in the world of mining, the S-curve of project development often sees a price lull during construction. This is where the tension between expectation and reality becomes most profitable for the observant investor. The market expects a long, quiet wait until 2027. The reality is that catalysts are coming much sooner. Throughout 2026, we are looking at major equipment deliveries, the completion of concrete work, and the energizing of the regional substations. Each of these milestones de-risks the project. If you are managing your own Fidelity brokerage account or using a SoFi active investing platform, you know that the market often waits for certainty before it bids a stock back up. By the time the mine is finished, the $5 price point will likely be a distant memory. The macroeconomic pressures cannot be ignored. High interest rates have made it more expensive to fund these mega projects, but LAC has already secured its primary funding stack. This puts it in a superior position compared to smaller miners who are still out in the cold trying to find investment. Whether you use Interactive Brokers for its professional-grade platform, or you're a fan of the simplicity of the Robinhood stock trading interface, the data is the same. The global lithium market is shifting from a surplus in 2024 and 2025 back toward a deficit as early as the end of this year. Supply disruptions in Australia and export bans in Zimbabwe are tightening the market faster than analysts expected. This is the reality that will eventually force a revaluation of LAC. Looking ahead, the risks are primarily execution-related. Can they stay on budget? The current CapEx guidance for 2026 is between $1.3 billion and $1.6 billion. Any significant overrun could lead to further equity dilution, which is always a concern for those holding individual shares. They recently launched a $250 million at-the-market equity program to give themselves some breathing room, which the market initially hated because it means more shares could hit the market. But again, the reality is that a fully funded project is worth infinitely more than a stalled one. The future outlook for Lithium Americas depends on its ability to transition from a story stock to a producer stock. In terms of catalysts, watch for the definitive capital estimate in the first half of this year. If the numbers come in close to expectations, it will provide a massive sigh of relief for the market. Also, keep an eye on the Technical Development Center in Reno. The processing of clay-based lithium is different from the traditional brine or hard rock methods, and any positive data regarding recovery rates will be a major win. Whether you're researching through Fidelity Wealth Management or looking for the best investing sites for your portfolio, it's clear that LAC is a high-risk, high-reward play that is currently being priced for the risk rather than the reward. To summarize the situation, the expectations surrounding Lithium Americas are currently weighed down by the boring construction phase and historical lithium price weakness. The reality, however, reveals a project that is the centerpiece of the U.S. energy independence strategy, backed by billions in government and corporate capital, and operating in a market that is fundamentally tightening. The contrast between a $4.91 stock price and an $8 analyst target shows the disconnect. While 2026 will be a year of spending and building, it is also the year where the foundation for the next decade of production is laid. The market may be impatient, but the fundamental reality of the Thacker Pass asset remains unchanged. It is a world-class resource in the right place at the right time, even if the current price chart doesn't reflect that just yet. As always, keep an eye on the construction milestones and the institutional inflow, as those are the real indicators of where the ship is headed. Maintain your discipline, watch the volume, and remember that in the world of critical minerals, the one who holds the resource usually holds the cards in the end. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.